Okay guys, and welcome to today's video. So in today's video we're going to be looking at essentials to market structure and direction. So in today's video I'm kind of covering what you need to actually identify market structure and market direction efficiently. Practically I'm just going to be giving you what I think that you need, especially for those of you still struggling to identify market structure and market direction correctly. So if you stay through to the end of today's video, I'm going to be showing you each of them step by step. So it's going to be more like a process, you understand? So it's going to be like a workflow, a flow through, maybe on a day-to-day basis. When you look at the chart, on a month-to-month basis, when you look at the chart, what process are you following? You understand? Because when you pay attention to the process, the results will definitely follow. So that's what I'm going to aim to achieve in this video. I want you to know, as regards smart money and concept, there are a lot of things I also removed out of this particular subject. In quotes, market structure, market direction. That's based on smart money. Those things I just feel like, okay, they are not needed now, you understand, for your development as a trader. They are very important, but they are not needed for now, you understand. There are things later on I'm going to start dropping one-on-one, and I'll be making reference to them. You get subsequently on this channel as you are developing as a trader. So without further ado, let's just get straight into what we have for today. So this is the workflow, the process we're going to be following. We're going to be defining your time frame, market condition, institutional order flow, areas of liquidity, low or high resistance liquidity setups. Then at the end of the day, of course, I'll give you an example to see how you can take this from start to finish and apply them. But before that, let me go through these 5 process for you to be better understand what we are talking about. So moving forward, defining your time frame. So when we talk about defining your time frame, this is a very important topic. I've seen a lot of traders, a lot of YouTubers in the Forex industry talk about, and they just talk about it in the terms of day trader, scalper. But there's a unique function about defining your time frame, which I also learned from my mentor. So what I've really found out about defining your time frame, it has to do a lot with your style, your personality, your temperament, and your risk appetite. So that is why the time frame you choose as a Forex trader has a lot to do with you as a person. You understand? It's not, oh, okay, and this time frame is the one that this person is using to make money, or this time frame is what my mentor is using. You understand? You want to know that time frame that works well with you, that resonates well with your personality, that rhymes with your temperament, and also your risk tolerance and risk appetite also flows with that particular time frame. For instance, also, if you are having a 9-to-5 job, definitely don't want to be trading the 15-minute time frame, because definitely there'll be no opportunity for you to do that. You understand? If you are a person that wants to be always in the market, definitely you don't want to be trading the monthly and weekly time frame. You want to be looking from the daily downwards. You understand? So these are very key factors you need to factor in when defining your time frame. You want to understand yourself as a person. You understand what really flows well with you, what really resonates well with you. And without further ado, this is how I will classify you to be able to define your time frame. So first, as a position trader, you will want to look at the monthly, weekly, daily, and 4-hour time frames. So you want to start your analysis from the monthly time frame, flow down to the weekly time frame, then to the daily, then the 4 hours. This is how I do it on day-to-day basis. What mine is actually 4. If you can look, my time frames are actually 4. Majority of the videos you see online, actually they only recommend 3 time frames, but I actually recommend 4. Why? For precisions. You know, I love taking precise trades. I like catching tops and bottoms. You get it's sniper entry. So that's the last time frames on each of these workflow of each of these styles of trading enables me take that precision that I want as regard this particular style of trading. So for position trader, for my sniper entry, I'll use the 4 hours, you understand, to get that sniper entry that I need. So the next style of trading will be the swing trading, which is also for the swing traders. So you want to be focusing on first from the weekly time frame, the daily time frame, the 4 hours, then the 1 hour. The next will be the short-term trader or short-term trading. So you'll be focusing on the daily, the 4 hours, the 1 hour, and the 15 minutes. And the next will be the day trading, which also for the day traders, which will be the 4 hours, the 1 hour, the 15 minutes, then the 5 minutes. Then the last of all will be the scalper. You want to focus on the 1 hour, the 15 minutes, the 5 minutes, then the 1 hour. So for the position trader, you're looking to take a trade in 2 to 3 months. You're looking to catch 2 or 3 trades in 3 months. Then for the swing trader, you're looking to catch 2 or 3 trades in a space of 1 month or 2 months, as the case may be, depending on what you are looking for. Short-term trader, you're looking to catch your trades within a week. You want to get in and out of the market within a week. For day trader, you know it's the name sell that particular style of trading already. You want to get in and out of the market in that particular day. And for a scalper, you want to get in and out of the market in a particular session. You understand? For in other words, for the New York open session, you want to get out before the New York closing session, or probably the London close session. So you want to be able to scalp the market within sessions or within a just little price movements, as the case may be. So without further ado, let's keep moving. The next will be market conditions. So once you've defined your time frame, the next thing, and you've already known the time frames you're going to use, the next thing you want to look at, okay, what condition is the market in? You want to know the current condition of the market. And there are a lot of ways to look at market condition, but I'm going to just be breaking down to mind. I see there are a lot of things I moved out from this video to be able to make you have a eagle focus on what really matters. The other things I removed, they count, they matter, but I don't want to create confusions in your mind. Why? Because as a mentor, as a teacher, I don't want to create that okay, now I've seen this, that now this other thing, now this other thing. No, I want you to say, okay, if it is not black, then it is white. If it's not white, then it's black. So that is why I try to narrow down everything to these simple 5 steps or process that will help you start identifying market structure and direction as quick as possible. So the next thing you want to look out for after defining your time frame is market condition. And to help us arrive at market condition, we're going to be looking at the 2 things we're going to be looking at. Is the market consolidating or is it trending? You understand? These are the 2 things you want to focus on. Are we in a consolidating market condition or are we in a trending market condition? So after the market condition is already identified, the next thing you want to consider is what is the institutional order flow. It simply means what side of the market have price been respecting or what side of the market has price been avoiding. So you just enter into the market's place now. You already know the time frames you need to start from. Now you already know your time frames, and now you already identify, okay, probably now the market is in a consolidating phase. You understand? So the trend is not obvious. Then you want to pay attention, okay, what side of the market is being respected in this segment of consolidation, or and also on the other hand, what side of the market is being avoided in this consolidating area. So these kind of things are the things you need to have at the back of your mind, or the process and walk through that help you define market structure and direction for high probability trades. So the next thing you want to look out for is, after you've identified your institutional order flow, you want to know, okay, what are the areas of liquidity? What are the areas of liquidity? Because your institutional order flow will respect areas of liquidity in one side of the market and take out areas of liquidity in the other side of the market. So you want to be able to define, okay, what are the areas of liquidity? So when we talk about areas of liquidity, we're talking about locations in price which act as support and resistance for us smart money traders and institutional minded traders. We are not looking at support and resistance as horizontal lines or trend lines. We are looking at support and resistance in terms of areas of liquidities. What are these areas of liquidity? I pointed them out in the previous video which I published on this channel, which is how to understand market structure, which is the fair value gap, the liquidity void, the order block, and the imbalance. So these are the 4 areas of liquidity you want to focus on. So there are locations in price which act as support and resistance, and also known as institutional reference points. So once you've defined your time frame, you now know, okay, this is your time frame you're going to use. The next thing is your market condition. After your market condition, the next thing is, okay, what is institutional order flow? After institutional order flow, the next thing you want to look out for is what are the areas of liquidity. And once you've done that, the last of all you want to look out for is, now we already know this, are we going to experience a low or high resistance liquidity setup, or is this rather a high or low resistance liquidity setup? In what sense are we talking about it? We're saying now we already know, okay, for instance, now we already found out that institutional order flow is respecting the bullish side. You understand? So it's respecting the bullish side and taking out the bearish side. So probably now in this consolidation, we are probably in a downtrend. You understand? So we are going to anticipate a down move. So we want to see price take down sides more. But the question will be, how fast will that happen in the marketplace? Are they price action areas in the marketplace? Are they close institutional reference points that's going to affect price from getting to our objective very fast? So I'm going to give us quick examples to be able to understand that. So let's just see that in a moment. Right here we have the dollar index, the daily chart. So I'm going to be using the daily chart, and I'm going to using the short-term trading approach for this particular example. And mind you, I'm trying to make this video as short as possible so that it can be something you can comprehend very fast and still go and apply on your chart and start seeing these things unfold for yourself. There are a lot of things I may not touch very quickly, yeah, but I just want you to pay attention so that you'll be able to grasp every one detail of everything I'm going to talk about. So I'm going to using the same process I just showed you in the previous slides to be able to identify a setup. So mind, if I bring the period separator, what we have here, that is December 2021 price action. So I'm not cherry picking any charts. Mind you, if you look at that particular price action, is not a very sweet price action. I chose that price action with a purpose in mind to tell you I'm not cherry picking. And after this example, if time permits, I'm still going to give you another example in another month, probably in the next month, which is January 2022. Then I'll leave the rest from that January to the current month we are now, July, for your own homework. So you go back and analyze the dollar index or any other charts, but from your assignment will be from February, the month of February to the month of July 2022, to use this same process I'm going to go through in this video to be able to identify your own setups. Is that okay? So let's just get into this one. So right here now we have the December 2021 price action right here. So let's just say we're coming to the chart for the first time, and let me bring a period separator, and we have our month was just about to start right here. So let me just zoom in. Our month was about to start right here. So we don't know that all those price action was going to unfold. We didn't know that all those price action was going to unfold. So this was what the price we had. You want to say, okay, let me just bring it here so we just flow through. So we don't have to be dragging it back and forth rather. So let's just ignore this particular price action right here. Let's ignore this one and focus on here, like this one has not happened. So mind you, it's the benefit of hindsight, so just bear with me. So we don't know this was going to happen. You understand? This is all we have. So if I ask every one person what has been happening right here, you understand, what particular price action, what has price been doing right here, you get, everybody will tell me it is what it has been trending. Mind you, the process we're flowing with the short-term traders approach. So we've already defined our time frames already. So our time frames we're going to be using here is the daily, the 4 hours, the 1 hour, then the 15 minutes for if you want to catch precise entries. You understand? But majorly just the daily, 4 hours and 1 hour. So we've already identified our time frame. So the next thing we're moving for is what? Market conditions. So that's what I'm asking. If I'm to ask every one of us, what can we see happen in this previous month, in the month of November? Price was trending. It came all the way from what? A consolidation just down here. Price trended what? Upwards. You get. And towards the end of the month, of November, we saw price start consolidating. Is that also? How do we know that? You see this swing low right here is also includes proximity with this swing low right here, and we have a swing high right here. So a consolidation can be experienced, can be anticipated, sorry, right here, you understand, to unfold in the next month. Are you seeing? These are the ways I analyze the chart. So just pay us attention so you understand what we're anticipating, how we have taken the workflow. So we have seen price move on the daily chart, which is our time frame we defined. We have seen price move what in a trending direction to the upside. But towards the end of the month, we started seeing a little or somewhat kind of consolidation, and we are not sure if that consolidation is just a short-term consolidation or a long-term consolidation. But it is obvious in the chart, and based on the chart we're looking at an institutional time frame chart, which is the daily chart. You understand? So that time frame is not a small time frame. These are the bank levels. So for us to say consolidation at this level, then that consolidation probably will flow through to a certain level. So probably into the next month or probably into the next week after this particular month, you understand, which is into the next week of the December 2021. So we don't know that yet. We're using the benefit of hindsight, but let's just say we anticipate. This is our thinking process. You understand? This is the way you think. You understand? As a trader, you're anticipating. You're a speculator in the market. So now this is what we are thinking now. So we already defined our time frame. Our market condition is a trending and into what a consolidating sphere. Now the third thing we want to consider is, okay, now that we already know our time frames, we are starting from the highest of all time frames. Now we already know our market condition. We left a trending and we are now in a somewhat of a consolidation. The next thing we want to ask, okay, what is the institutional order flow? You understand? In other words, what areas have price been respecting and what areas have price been taking out? You understand? So if I bring this my marker right here again, we see that this swing low was taken out by this swing low here, but this swing high has not been taken out yet. And when we look at also before this month started, we saw that this swing low was being respected. You understand? This swing low was being respected. That's I'm talking about this series of consolidation right here. You get? And so far so good. Price extended here, but didn't take out this swing high here. So we can see that price is somewhat in an indecision when it got to this particular candle, because price didn't take the low here that took out this low, and price didn't take out the high here that informed this low downwards. So this somewhat like an indecision. We don't know the particular direction to flow through. So what we're going to do is wait and see what price action will do, or tell us what information price action is going to tell us to inform our institutional order flow. Is that also? So I'm going to remove that stuff and probably also the period separator so that you see what I want to show you clearly. So the next thing we want to look out is to wait for price to print out, and we saw price print this candle, respecting this low, print this other candle, respecting this low, print this other candle, respecting this low, print this other candle, also respecting this low. But at the printing ending of this candle, we saw a swing point being created here. You understand? We saw a swing point being created here. So someone can say, okay, we have a swing high here, another swing high here, and a swing high here. And we had a swing low here and a swing low here. So this high has not been taken out. This high has not been taken out. You understand? And we now have a new swing low, swing high rather here. So this is somewhat as an indecision in the market. We don't know the direction to take yet. Yes, we have been seeing price take respect the lows, you understand, but it hasn't been taking probably any highs, because in line with our strategy, we are looking to catch a trade within a week. So day traders can still find setup within this region, you understand, but I'm thinking in a way of a short-term trader now. You understand? Mind, I say your personality informs your style of trading. So probably some of us could have found setup here, but now in this case there's no setup. This is still an indecision in the marketplace. So this swing high has been formed right here. Price went higher again, didn't take this low, that formed this swing high, and probably didn't take this swing high. So this is another confirmation of indecision in the marketplace. But in this day, we saw price took out this swing high right here. We saw price took out the swing high. And when price took out the swing high, what do we see? We saw price dive down. You understand? Not coming for this swing low here, but took out some lows quite all right. To this low, took out to this low right here. Took out to this low. What does that tell us? That now price is willing to take higher prices and has not shown any willingness rather to come for lower prices. How do we know that? Because immediately after this candlestick came down, the next candlestick formed another swing low. Not taking out this swing low, but we have seen a swing high here being taken out. Are you understanding this? This is going to change your trading psychology, your trading direction, all those confusions you have in finding right market direction. This is going to change the whole paradigm for you if you pay rash attention to what I'm showing you here. So we see that price have not taken this low, but has taken this swing high that was formed rather in between this swing high and this swing low. Are you seeing that? So now price came and created a new swing low, but has taken a swing high right here. Is that not so? So now here, after this candle was formed, from this point now, our institutional order flow is bullish. So we mark here bullish. So mind you, are using the benefit of hindsight, so we're going to just mark there up as bullish. So now we already know that, okay, at this particular, the next day, which was this particular candle forming, is going to, what we're anticipating bullish prices in the dollar index will drop to the 4 hours time frame. So now we've defined our time frames. We knew the market condition, consolidating market condition. The next thing now we've identified is our institutional order flow. Now the next thing we want to identify is our areas of liquidity. So now our area of liquidity is showing us that, okay, we have a low being taken out here that created a swing low, and we have a swing high over here that we're anticipating for price to take out, and this from the daily time frame, and probably a double top right here that price should trade into later in the future. So if we drop down to the 4 hours and drag our charts here, we can see that this is what it looks like on the 4 hours. This is the swing low we saw on the daily time frame right here. You understand? So this is the start of this new day. You understand? The start of this new day. So on the 4 hours, we want to identify our areas of liquidity more to give us clarity and more precise entry into the marketplace. So if we look at this piece of price action right here, we can see that we have an order block here. So we're going to outline that order block. Mind you, these areas of liquidity we're outlining now. That's an order block right there, and we saw price went higher and probably went higher, taking out this high. So that confirms us that price is going for what? Higher prices. And if price has taken this high, where will be the next high for price to target? This high. So this is our first objective, you want to say, based on areas of liquidity, and it will be our second objective where we expect to take our profits. Then we're expecting price to return to this order block to send price higher. For those of you that have not watched the order block video, I'll leave a link around here in this video for you to go and watch that. So price trades higher the next day and comes into what? The order block, right into the order block here, into the mean threshold of the order block. And since then we saw a response in price. So if I go lower into the 1 hour time frame, you can also see that there was also an order block too on the 1 hour right here, and price traded into where? Into it. Price traded into this particular order block here, and we saw a response in price. We want to see a response in price once we see that, and that the response in price was shown in these two bullish candle here. Or probably if you are too scared to enter here, you'd have entered on this particular candle here, and you'd have bought all the way up into this, your first objective. That will give you 500 pips right there. Or probably you would have waited for this drop, which was on a Tuesday right here, into this order block right here, and it would have been your entry. For those of you that like um that's still like more confirmation. So there will be another order block for you to trade off of, and that will be have led you to this particular area here, but that will give you 395 pip. So if I zoom out, if you have held your trade all the way from this region to this highest point, which is to this particular region, that would have given you more of 559. As if you are taking your trade from this region, but if you are taking it from here, that would have given you probably 479 pips. So that's the first example on one trade you have caught on using the dollar index and using this process and approach to the marketplace. So let's just go back to the daily time frame again to see another setup. So now we've gotten this setup done. If you don't understand, you can just watch this video over again, and I'm sure you're gonna get it over again. So we're still in a consolidating market condition. We are still in a consolidating market condition. I don't want to bore you with plenty things. I just want to show you another example, one more example, then we'll call it a day in this video. So let's say price has taken out this particular area of liquidity we identified here, and we want to know, okay, what is the next market direction? So let me take out these trend lines from the chart right now. So what will be the next market direction? So we've seen price traded up to this high right here. So this whole price action has printed out up to this point. You understand? So all this price action has printed out. So how do we find the next market direction? How do we identify the next market structure? You understand? So based on the process, you understand, our time frame is what, still using the daily and what, and still using the 4 hours and the 1 hour. The second one is that we are still in a consolidating market condition. The third of all is that since we're in a consolidating market condition, we want to know our institutional order flow. So that's where we are now. Since the market condition is already obvious to us that it's consolidating. So the thing that is not yet obvious to us is the institutional order flow. And institutional order flow, what are the areas, what side of the market is the market respecting, and what side is the market taking out? You understand? So now, in this case now, you see this swing point here, price failed to take that here. It failed to take this high here. You understand? And before this particular high was formed here, we have a low here. You understand? So from this region to this region, price was bullish all along. Price was what? Was bullish upward. So now the next thing we want to look out for is that, okay, where's the next institutional order flow? So we don't know yet. There's an indecision in the market. We don't know what, of course, where the market actually want to take price to. But all we know for sure is that we're going to wait. You understand? That's why I like giving us the 3 factors: time, patience, and discipline. You understand? These are 3 factors that make you a successful trader. So this high is here, not taken out yet, and there's a new high being formed here. You understand? We know that for sure, rather, when this particular candle forms. You understand? So this particular candle forms, and there's a new high right here. So now this high now, let's see if it takes out this low. Well, that's very, 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 very. So let's just use that's the low came in at 95,847, and this low here is 95,846, 95,846. So this particular low actually took out this low here. So we can see that price respected the high here and violated the low right here, because this low came at 847, this one came at 846. So 846 is just right here, 846, and 847 is higher. So it actually took out this swing low we had here. So price traded downwards. So what are we going to wait for now? We have already identified our institutional order flow. Now it is bearish. So now from this time onward, we want to look for bearish moves. We want to anticipate bearish moves from this time onward. So now we already know our institutional order flow is bearish. Why? Because we've seen price respect a high respect another high, but took out a swing low right here. You understand? Within this same month, you understand? We want to, and we've now set to the tone that our market, our institutional order flow is bearish. We could be wrong, but we want to see price from this time onward respect the buy side and take out the sell side. So let's drop down to the 4-hour time frame. Trying to make this video as short as possible. Okay, so the next day we saw, or the next week rather, whatever day it is actually, we saw price trade higher into where? Into this double high over here. We saw price traded into this what? Double high, and price traded lower, and we had an order block here on the 15 minutes. So let me outline the areas of liquidity right here, following the same process that I outlined in this video earlier. So price took out this double high here. I'm going to explain this institutional reference point later, but just see it as a double high. And we have another block here created. It was created when this particular black candle closed. This became a bearish order block. So we want to see price trade into this particular order block for our entry. So I'm going to extend this particular order block from in the 4 hours in time. So since we have seen this happen in price, we want to know, okay, where are we anticipating to take out, that is to use as our objective for take profit. That will be our objective for take profit, will be this double bottom right here. It will be our first objective. Our second objective will be probably this lows over here, right here, and third objective will probably be this low of this particular high that was being avoided here. So I'm going to outline that low with an horizontal line instead. So let's see, that's 95,444. So let's go to the 1 hour for precise entry. Let's see what we have. So this is the order block from the 4 hours. So price traded downward, failed to get into the order block, traded downwards again, eventually got into the order block, up into the mean threshold of the order block, and we got our entry on this particular candle right here. So straight to our first objective will give us 651 pip. So we didn't get that as quick as possible, but since it's a short-term trade, our trade was taken on, I brought the period separator in. Our trade was taken in on a Tuesday right here, and probably would have taken it out on a Friday, but mind you, it was few pips short of getting into our main target. So you'd have as well taken out your profit there, or as well held it on for too long. But if you had held it on for too long, the next week on a Wednesday, that was when price actually came into these particular areas of objective for our liquidity. These are area of liquidity right here, so which is the double bottom. So price eventually came there. If you have held for longer periods, you see that price actually came into this third price level for liquidity. And if you had held longer, you see that price after many months, I say many months, after many weeks, that's 1, 2, 3, and on the 4th week, price eventually came back to our third objective in price. So it depends on how long you want to hold it, but since we are talking about short-term trading, I would advise that you want to get in and out within a week, and that means taking out your profits on a Friday, which is right here, just below this swing low right here. So price may fail to get to your objective. Don't be greedy, just get out, because sometimes you can see price reverse and you may think that the trend is about to go against you, and you can be going out of a market that was once in your favor, but you can be getting out of that market in a loss. So these are experience that I've had in the market, you understand? So you want to take your profits once you see that at least that's giving you a reasonable amount of pips in the direction that you anticipated. Even though it fails to get to that main objective, you want to get out, except you are doing swing trading or you are doing position trading, then you can afford to hold it more than 1 week. You can hold it for 2 weeks, you can hold it for 3 weeks, depending on the style of trading. But in this context, we try to look at it from the perspective of the short-term trader. So I was supposed to give you another example using the January um January price action, 2021 price action. But because of time, this video has stayed too long than I expected. I'm going to be calling the day right here in this video. So you can go in and analyze from January all the way to um July 2022, from January 2022 to July 2022, using the same approach, using the same process, using the same workflow to guide yourself through. You understand? And you can send the your own analysis, probably month by month. For those of you that care to do that, you can send your analysis on how you have broke down the chart to my email, which is fxtruth@gmail.com, fxtruthacademy@gmail.com. I'm going to be leaving the link in the description, and I'm also going to be pasting it somewhere in this video, so you can leave your own analysis, the way you analyze your own chart, using the same process and workflow I just showed here, from the month of January 2022 to the month of July 2022. Or you can stop at the month of June. So I want to just see what individually as traders, what we are able to, how are we able to use this particular process and mindset and approach of trading, and how are we able to define market direction. So I want you to outline. You can just do it. You can use trading view in the forms of a video, or you can just practically just outline areas of your entries in the chart, screenshot them and just compile them. You can do them, you can just do for 3 months and send it to me on my Gmail account, fxtruthacademy@gmail.com. I'll be sure to review them and I'll be sure to get back to you. Just tell me the reason why you entered at that point using the same process I outlined in this video. You don't have to do anything more. I just want to know that some of us follow and understand what I actually shared here in this video. But if you don't understand, just watch this video a couple of other times and stay true to this channel. So hit the subscribe button. I'm going to be uploading a lot of other content that's going to help you understand market structure and market direction. So with that, stay true and I'll talk to you soon.